Greetings, traders. This is Ernest Watson. Um, I'm here to address a. Oh my God. I'm here to address this false information that's been taught by gurus and other traders who esteem themselves to be professionals and whatever, you know, about the term overbought and oversold. And the danger behind that term and what it actually suggests to the beginner trader or to the intermediate and even sometimes to the advanced trader. You will get burned believing that the misconception of oversold and overbought is actually a reality, when in all actuality, oversold and overbought is a misconception and it's false knowledge. All right. And I will clear it up and show you how you will get destroyed believing that this knowledge is true. Whenever we've all heard the term, okay, like for example, look at this indicator. When on the RSI, when the levels drop below the 30 number, right? The 30, it is considered to it's considered to a trader to be oversold. So that means that you're supposed to be preparing for a long trade shortly afterwards or anticipating to go long afterwards because the indicator is showing or displaying that it reached below the 30. That's the worst knowledge you could ever learn. That is just, it's totally false. Whenever the 30 shows that it is been breached, it is indicating that the bears have strength and the bears have momentum. It's not indicating to you to go over and take a long trade. It's not. That's not the purpose of it. But you see, these gurus, they've been teaching this false knowledge. Why? Because they want us to continue losing our trades so that we can continue buying their products. This is the entire deception behind teaching the false knowledge. Now, what it actually indicates is that the bears have power. And when it's overbought, which is the dangerous term, or when the RSI passes the number 60, as you see here, it's indicating that the bulls have power. All right, so now let's take a scenario. The average trader would say, all right, this just crossed the 30 mark, right? So they would be saying to themselves, all right, as I'm going to prepare to go, I'm going to go long. Now, look what happened. They took a long trade, but look what happened. This is just very terrible. Look what happened. They would have gotten somewhere around here, right? Now look at the actual candles. What did the candles give them? What did the candles give them? Nothing. They would have lost the trade tremendously. And look at the trend. It's going down. The trend is going down. So they would have lost that trade, right? I'm just going to put the losing points, right? They would have lost right here. Let's do this right here. Let's do this. They would have lost in this section, thinking that, okay, we're going up. You didn't go up, it went down. Next, they would have said, oh, okay, it dropped below far below the 30. Now it's time to go up. But look up here. Look what the market gave them. Look at the candles. Look, that's not a reward. What is that? Look right here. They would have got creamed. Creamed. So they lost this one too. The market is still going down. So they would have waited. Okay, it crosses they see that it crosses the 34 again over here, right? Let's put something right there, right? In this section. They would say, oh, it's below the 34. It's time for me to go long. But look what the market gave them. The market's still going down. And look at this. Look at the spike. Look at the consolidation. Look at the candles, the very tiny candles. What would have happened? They would have lost. They would have got creamed right here. Creamed. Another losing trade. Do not, you see, this is just, it's terrible. Now let's see and look what happened over here. This is terrible, terrible knowledge. This went below the 30. Look at right here. This went below the 30, right? This went below the 30. Look at this. This went below the 30. But look at the trend. The trend continued downwards. Continued downwards. Now they're anticipating a reversal. Now, look at this. Look at this. They would have got destroyed. You would have entered here, you would have got destroyed. You would have been anticipating, okay, this thing is really, really going up. You would have entered right here. Right there. But look at the candle. The candle went down. The candle went down, and you would have thought, oh, okay, oh man, candle went down on me. It's supposed to be going up. It went down. Then a candle went up later. But you seeing this going down, you would have gotten out of the trade because you would have said, oh no, it's going against me. Then you would have gotten out of the trade. Same case right here. It touches the 34, you're thinking, oh, we're going up. But look at this little tiny candle that it gave you going up. And then after that, the market came right back down, 2 candles, and took you out of your trade. And the trend continued downwards. You would have gotten creamed because you're anticipating that, okay, the market's going to go up here. Or it's a reversal. No, it's not a reversal. Look at how many times, or look at how long it dropped below the 34 here. You're anticipating an up trade because to you, you're saying, oh, I've been taught that when it drops below there, it's oversold and I'm supposed to take a reversal trade. But look what the market gave you. You got destroyed every time you tried to take a reversal trade. Utterly destroyed. You lost money. Your confidence is down now. You lost how many times? 1, 2, 3. Now you're still following the Oh, it's oversold rule. And look, you got destroyed every time. You got destroyed here. It dropped below here. How many times? One, two, three, four times below. But look what the market gave you. It continued going down. You got utterly destroyed. Then it went up later. But still, the candles came back down, took you out of the trade. Okay? Never buy into what people are teaching. Like, you got to question your why are they teaching this stuff? Once again, right here, when some supposedly oversold. That's what the beginners call it. Say, oh, this is oversold, I'm going to go up. It went right here. You would have gotten in right here, thinking that, okay, here's a reversal coming. But guess what? A little tiny candle formed right here, and then the next candle took you right out of the trade. You would have said, oh no, the trade is going against me. Your stop loss is here. This candle took your stop loss out. Let's play the scenario. You got in here. The bullish candle went up here. You're saying, oh yeah, we're going up, we're going up, we got this. Guess what? The next two candles took you out. It went against you. Then you said, okay, maybe I should just wait and stay in the trade. But guess what? This candle, bearish candle, took your stop loss out. Now you're out of the trade. Then the market went up. Not every time when you see on your indicator that the market basically reaches below these points, that it means that you're supposed to set up for a reversal trade. It actually does not mean that. It really means that the bears have strength. And the opposite direction, it means that the bulls have strength. That's all it means. It's not telling you to go for a reversal trade. That's false teaching and that's false information. You would have lost once, twice, three, four, five, six, and I can continue to go on and show you other places you would have got creamed at too. Guess what? Your morale is down. Here's another place you would have lost tremendously at. Because, look, it's under the 34. How many times? One, two, three times. You would have said, yeah, it hit it again. Because you would have got in here saying, oh, yeah, we're going up. And then it went back down on you, took you out of the trade. Then you would have got in here saying, oh, yeah, we're going up. It's going to really go up this time. You got taken out again. Then it would have came here. You would have said, oh, yeah, we're going up again. But look what the market, look what it gave you. You got utterly destroyed all three times. You got destroyed. You're confident. You just lost three trades. Now, it's no telling what lot size you took, or I don't know what lot size you took. Think about it. You're so sure that these trades were going to reverse, though. You were very, very sure that. You were certain. Because why? You've been taught by the gurus that, yo, when it hits the quote unquote oversold, you prepare for a reversal trade. Nope. No, you don't. You actually prepare in the opposite direction. You're most likely to win in the opposite direction. Because when it hits that point, it's basically telling you that the bears have power. Why would you trade against the power? Huh? Does that That's not too smart. Yeah. So you lost here, 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 you lost here. I can continue going back to show you other places you would have gotten creamed at too. You would have gotten creamed. Do not believe what these gurus are teaching you. Just because someone has a YouTube channel and they have X amount of subscribers and they show these fancy looking indicators such as this, and they're like, yeah, when this hits this point, that means this. So you're trusting every word they say instead of looking at the market yourself. The market is telling you, the candlesticks are telling you exactly what's going on. The trend is telling you exactly what's going on, but you're listening to other people. This may offend some people. I don't expect for everyone to take kindly to what has been said and what has been displayed. Some people are going to look at this and say, oh man, that damn Ernest again. Here he goes, opposing the standards. He's opposing the standard knowledge. He doesn't know what he's talking about. Okay. I want you to use your own discretion. Don't trust what Ernest say. Look at the market. Trust what the market is saying. Don't trust an indicator. Trust what the market is saying. Well, I think that I don't need to show any other experiences where you would have lost money at and your winning streak would stay at 50% to 60%. Yeah. So basically, my advice is this. 90% of people lose at trading because why? 90% of people are all doing the same exact thing. They're using indicators. They're trusting in what the gurus are saying about the indicators. And they're being taught by the blind leading the blind. They're being taught by people who are basically in line to take their money. It's a scam operation. If I give you a Lamborghini and I say, yeah, the Lamborghini drives exactly like a Nissan, would you just trust whatever I say instead of learning how to control the Lamborghini yourself? Think about it. Shouldn't you learn how the controls operate yourself? Shouldn't you learn the do's and the don'ts yourself? Okay. All right. So I'm sorry if I pissed somebody off who is in love with their indicators. As you can see, I have it here. And this is my own customized RSI indicator. But do I use this thing? I guarantee you, I do not use it. It stays like this. Down, not saying anything. In rare situations, rare, and I mean extremely rare situations, do I actually look at it. So now my advice is that if you see it overbought in a bear trend, then go down. If you see it oversold in a bull trend, do the opposite. Take care, everybody.